Hello and welcome to Sovereign Financials, financial education for everyone. Hi guys, welcome back to Sovereign Financials. 2 weeks ago or so we talked about why I believe the stock market is going to come down either this year or next year, and today we're going to hit up a couple of reasons why I believe the housing bubble 2.0 will come down this year or 2019 as well. The first graph we're going to look at here is the same one that I showed you guys before, the case-shiller index. Looks at the composite home price index for 20 cities, as you can read up here. Kind of gives us an idea of what housing prices are across the nation. If you look at the peak back in 2006 during the 2008 crash, the peak was 206 in April of 2006. And then now that we have some June data, we're at 211, which is definitely higher than the last bubble was in terms of the housing prices across the nation. Another part here that I like to pull up is that if you look at the trend of this thing, we're going up until 2006, and then the market kind of topped off for a while, and then the market started to downtrend afterwards. And we have something kind of similar here. It might be the early makes of it, where you see the housing prices are going up, and then right here at the end, it looks like we're kind of leveling off there. And then the question is the next move a downward move? Next, we're going to look at the median sales price of houses sold in the United States. So this gives us a pretty up-to-date information upon what the average or the median home sales prices are. If you look at 2007, I mean, obviously these numbers are lower than they are now, but $257,000. And then if you go to 2017, housing prices, the median price peaked at $337,000. And then if you go to Q4 2017, the price was $337,000. And now if you go down to Q2 of 2018, the house's price has dropped by 10%, basically $30,000. What's more interesting here is the housing market in this current cycle peaked in Q4 of 2017, but usually house prices keep going up during the summer. So Q1, Q2 are actually down. So Q2 would be summertime, and house prices are coming down in the summer, which is very unusual. If you come over here in 2004, housing prices were going up still in Q2. Q3 took a little dip. Q4 is up. Q2 is up in 2005. House prices usually go up in the summer as people are moving, relocating, etc. So if you can see here, houses prices were going up, and then at the top here, and they started coming down. And what's more interesting is this part. Recessions are always defined in retrospect. So if you look at the peak of the market here, and you come over here, this is actually 3 quarters worth of space the house prices were going down for before this recession was declared. The recession is this gray bracket here. Let me just clear this up. So if you look, house prices were going down for 3 months before the government said we're in a recession. And if you look here, 3 quarters. Now if you look here, house prices are going down for 2 quarters. So if we go down for 1 more quarter, then the government would declare that we're in another recession, which would be here. So we'll kind of see how that plays out. But the most interesting thing is that house prices are down by 10% during the summer months, which is very unusual. The next graph here is looking at gross profits for home flippers. And as you can see, ever since the bubble burst down here in 2009, profits were low. And then as the housing boom was going on, profits were going up. And then as it gets more difficult to buy houses for cheap and then sell them more expensive, the profit for these house flippers has been going down here for a couple quarters. Next graph here is the Redfin Housing Demand Index, which basically just takes a look at how much demand there is for housing, people placing bids and going on tours, etc. This data here is all from 2017 coming up here. So this is July 2017 is right here at 136. It peaked out in September 2017. And then since then, it's just been coming down. There's a little blip here over the summer months, June and July. But as you can see, in terms of housing demand, once again, it's kind of looking like the end of 2017 was kind of the peak of demand, and since then we've had a downtrend in housing demand as well. This here is an article from CNBC that is just looking at international home sales. I mean, if you live in like California or Vancouver or Seattle, a lot of your sales, unfortunately, are coming from overseas money, which makes it much more harder for people that are actually living there to afford these things. But you can see the dollar volume of U.S. home sales to international buyers between April 2017 to March 2018 dropped 21% compared with the previous 12-month period. So a lot less foreign money is coming into houses too, and this can help fuel a housing correction. This here is specifically for California. This is coming from the California Association of Realtors, as you can see up here. I just kind of want to show you some of the statistics for different counties in the area. So this is for California specifically, and this is the median price of houses. This is specifically the price and the change month over month, basically meaning from one month to the next, from June to July, how much of a change was there. And then the sales, the number of homes being sold month to month changes as well. So California single family homes, the month over month house prices are down by 1.9%. Now that's not very much in general, but we'll look at some specifics in a little bit. And then if you can see the sales, the number of houses being sold month to month is also down by about 1%. And this is over the summer, right? It should be, houses prices should be going up over the summer, and sales should be going up over the summer, not down. If you look at the Los Angeles metropolitan area, there's a small decrease in price, but more importantly, the sales are down by 11%. There's 11% less houses being sold in July than June, which once again very atypical for a summer month. And then Inland Empire, house prices are slightly up, but the total number of homes being sold is down. And then if you look at the San Francisco Bay Area, their house prices are down by 6.2%, and the number of sales is down by 7%. And if you could look here, you see some of these, some of these counties have big decreases in the number of sales. 17% for Marin, 17.2% decrease in home sales for San Francisco. And then you can see that some of these individual counties are down, 2.5%, down 3.5%. Sonoma down 7.8%. One of the biggest things here is Santa Barbara. Their month over month price change for housing is down 27%. From June to July. So in June, the median house price was $753,000 in Santa Barbara, and then in July, the median home sale was only $550,000. Quite a significant decrease there. And then I don't know all these counties in Central Valley, but you can see some of these are down, 8%, down 6%, down 2 to 3%. I don't know where Del Norte is, down to 32%. Lake down 16%, down 12%, down 12%. So there's some big changes there. This is an article here, a little graph that was made by Harvard, looking at a 2018 housing price, or I should say like housing report that they made. And it says that the low interest rates have offset rising prices, keeping monthly costs down. And if you look at the interest rate here, the interest rates have been going down. The yellow, which is median household income, has been essentially flat this whole time, and then the teal is the median house price. Was went up in 2006, obviously came down to 2011, and since then it's been creeping up. The reason why I wanted to bring this graph up is because the major thing that's able to support large or very high housing prices is a very low interest rate. And the Fed has already said that essentially they're going to raise the interest rates again in September. This is an article by CNBC. It says the market continues to think there's a near certain odds of 93% chance of a rate hike in September, and December is tracking over 80%. So likely 2 more rate hikes this year. And like I said in my previous video, the Fed is currently on a tightening cycle and will continue to increase the rates. And if rates start increasing, then the affordability of the houses start coming down, and that might create another downturn. Another thing here is in the same report, if you look at some areas like almost entire West Coast, this is a home price to income ratio. Instead of giving you the national averages, which I gave you 2 weeks ago, this breaks it down by each area, almost by each county or by each metro. If you look in California, a good house price compared to your income would be 3 to 4 times, so like either a light teal or a light yellow. And a lot of these areas are either dark oranges, which is 5 to 7, 8 times your income is what the price of the house is. And then some of these orange places are 8 times the income, which is extremely large and makes it so that there's no extra money at the the end of the month, and just a small setback like losing your job for 2 months or some unexpected bills or hardships, and then all these people can just very easily lose their house. That's not true for the Midwest or get out towards like the near the East Coast, but along the East Coast itself is kind of hard to live as well because house prices are so expensive compared to the income over there. And then this is the last thing is I want to show you is that this looks at rent versus income. If you see the teal is the median renter income, which is kind of essentially unchanged. And then the purple here is the median gross rent, which is going up. There's a huge difference here between the gross rent that people are currently paying and their income. And when the rent prices are going up faster and the income is essentially stable, these people don't have any extra money to save for a down payment. So I think you might see less individual buyers purchasing homes, and it might be more investors that are doing it, forcing more people once again to rent homes than to purchase them. Alright guys, thanks for watching the video. I appreciate it. If you liked the video, it'd be awesome if you could subscribe in the bottom down here. Like it, share it with your friends. Appreciate it. Alright, see you guys next week.